Tonight, the global financial system is reeling, caught off guard by a development that few saw coming. The world is still processing a stunning move by Germany, a nation long seen as a pillar of stability in Europe. In an unprecedented step, Berlin has issued a direct, non-negotiable demand to the United States: return all German gold held in the Federal Reserve Bank of New York, immediately and in full. This amounts to over $200 billion worth of gold, one of the largest foreign gold holdings on American soil, representing decades of trust and cooperation. Unlike previous gradual repatriations that were negotiated quietly and over years, this is an ultimatum, not a request. The tone is unmistakably urgent. The demand has sent shockwaves through diplomatic and financial circles, signaling a deep fracture in US-German trust and raising questions about the future of Western alliances. Germany's message is clear: economic sovereignty is non-negotiable, and trust in the American-led financial order is fading fast. The symbolism of reclaiming gold is impossible to ignore. The timing is telling. German investment in the US has collapsed by 45% in just 18 months, while investment in China is soaring. This shift in capital flows is a warning sign for the global balance of power. German industry is voting with its capital, and now, with its gold. The movement of these reserves is a clear signal that Germany is preparing for a new era in global finance. This move is a powerful statement. The old certainties of the transatlantic alliance are gone, replaced by a climate of suspicion and self-interest. The US Federal Reserve now faces immediate logistical and financial questions. Can it comply with Berlin's demand? And what precedent does this set for other nations with assets in America? Every nation with gold in New York, London, or Paris is now questioning the safety of their own assets. Central banks around the world are watching closely, weighing their next moves. If Germany, a core NATO and G7 member, wants its gold home, what does that say about global trust? Allies are now second-guessing the very foundations of their partnerships. This is more than a financial transaction. It's the opening salvo in a new era of economic rivalry, even among allies. The world is witnessing the unraveling of old alliances in real time. The implications are enormous, and the world is watching. Markets are volatile, leaders are scrambling, and uncertainty is spreading across continents. Berlin's golden ultimatum has exposed the fragile trust holding the global economy together. As the dust settles, one thing is clear: the rules of the game have changed, and no one knows what comes next. To truly grasp the magnitude of Germany's demand, we must first consider its immense gold reserves. These are the world's second largest, totaling over 3,355 metric tons. This staggering amount of gold is not just a number. It represents decades of careful accumulation and a deep-seated commitment to financial security. Each bar is a silent testament to Germany's economic foresight and its determination to safeguard its future. Altogether, that's more than $230 billion in gold, a physical guarantee of national stability and a powerful buffer against economic uncertainty. In times of crisis, these reserves serve as a crucial backstop, providing reassurance to both the government and its citizens that Germany can weather financial storms. For Germany, a nation marked by the scars of hyperinflation in the 1920s, gold is more than just a store of wealth. It's a symbol of prudence, resilience, and hard-earned security. The memory of past economic turmoil has shaped a national ethos that values tangible assets over fleeting promises. Until recently, over a third of this treasure, about 1,236 tons, remained stored in New York, forming the single largest cache of German wealth held abroad. This arrangement was a legacy of the Cold War, when storing gold overseas was seen as a safeguard against potential threats at home. This transatlantic arrangement was built on trust that the gold was safe, accessible, and unequivocally German, no matter where it was stored. For decades, this trust underpinned a vital pillar of the global financial system, but today, that trust has been shattered. Recent events have raised doubts about the security and sovereignty of foreign-held assets, prompting urgent questions in Berlin. The demand to repatriate this gold transforms it from a passive asset into a powerful geopolitical bargaining chip. Suddenly, these bars are at the center of a high-stakes international chess game. Moving such a vast hoard, over 100,000 individual gold bars, will require military-grade logistics, meticulous planning, and the utmost secrecy. The operation is so massive, it's expected to send shockwaves through global markets and financial institutions. The cost and complexity of this undertaking are immense, but Berlin is willing to bear them. For German leaders, the price is justified by the promise of greater control and peace of mind. For Germany, the risk of leaving its gold in American hands now outweighs the risk and expense of bringing it home. The calculus has changed, and so has the world. This is a direct challenge to the integrity of the international financial system, a bold move that questions old alliances and established norms. The world is about to witness a historic transfer of wealth and power, one that could reshape the global balance for years to come. Why was Germany's gold ever in New York? It's a question that echoes through the corridors of history, and the answer is more complex than it first appears. The answer lies in Cold War strategy, a time when the world was divided and every move was calculated for survival. After World War II, West Germany amassed US dollars through trade and aid, then converted much of that wealth into gold. But shipping it home across a divided Europe was fraught with danger and uncertainty. The real fear was a Soviet invasion. The Iron Curtain was more than a metaphor. It was a looming threat. If the Red Army swept into Germany, its gold reserves could be seized in a matter of hours, vanishing into the fog of war. Storing gold in New York, London and Paris became a form of insurance, keeping the nation's wealth out of Soviet reach and ensuring Germany's future could not be held hostage. This arrangement was more than practical. It was a symbol of transatlantic trust. Germany's treasure was placed in the hands of its protector, the United States, forging a bond that went beyond economics. The arrangement reinforced the NATO alliance, cementing the US dollar's dominance in global finance and politics. It was a statement of unity against a common threat. After the Soviet threat faded, the original rationale for keeping gold abroad disappeared. Yet inertia, habit, and lingering trust kept it in New York for decades longer. For years, the gold's location became a relic of a bygone era, a silent testament to the unity and shared purpose of the West during the Cold War. But now, that unity is fading. The world has changed, and so have the alliances that once seemed unbreakable. Germany's demand to repatriate its gold signals the end of an era. Trust has been replaced by caution, and old certainties are being questioned. The gold's return is more than a logistical move. It's a sign that the foundation of the old alliance has begun to crumble, brick by brick. What was once a Cold War necessity is now seen as a potential liability, a risk in a world where alliances are no longer guaranteed. The world is witnessing the unraveling of a 70-year-old financial pact, a shift that could reshape the global order. The question now is clear: who will be next to question the old arrangements, and what new alliances will emerge from the uncertainty? Germany's gold demand is the latest chapter in a dramatic shift of capital from America to Asia. German investment in the US has plunged 45%, while investment in China has surged over 70%. Industrial giants like Volkswagen and BASF are halting US projects and doubling down in China. The message from German boardrooms is clear: America is no longer the preferred partner. Unpredictable US policies, high energy costs, and a less welcoming climate have driven German industry eastward. China, despite its risks, offers a vast market, long-term certainty, and government support for major projects. For German companies, the calculation is simple. Future growth lies in the east. The gold repatriation is the ultimate symbol of this pivot. Germany is betting on a new economic order, one where America is no longer the default destination for its wealth. The world's industrial map is being redrawn, and Berlin's move is a bold line in the sand. Why is German industry fleeing the US, and why does Berlin want its gold back? The answer starts with energy. The destruction of the Nord Stream pipelines in 2022 sent German energy prices soaring, crippling its manufacturing base. Many in Germany suspect the US benefited both geopolitically and commercially by selling expensive liquefied natural gas to Europe. This has fueled resentment and a sense of betrayal. On top of that, aggressive US trade policies like the Inflation Reduction Act have tilted the playing field, luring green tech to America and penalizing European firms. The US is now seen as a competitor, not a champion of free trade. High energy costs and protectionism have created a perfect storm for German industry. The trust that once underpinned the transatlantic partnership has eroded. Berlin's gold demand is rooted in this profound sense of grievance. The economic alliance is fracturing, and Germany is taking back control. German industry's pivot to China isn't just about escaping US pressures, it's about seizing new opportunities. China offers unrivaled market access, long-term planning, and government guarantees for massive investments. For automakers like Volkswagen and BMW, China is now the world's most important market. Unlike the US, China provides stability and rapid infrastructure development. German firms are building R&D centers and factories in China, not just to sell, but to innovate for the Chinese market. China is no longer just a source of cheap labor, it's a leader in electric vehicles and future tech. The risks are real: intellectual property theft and political unpredictability. But German leaders believe missing out on China is a bigger risk than being there. The industrial realignment is seismic and the gold demand is its geopolitical echo. Germany is choosing growth in the east over stagnation in the west. Germany's urgent gold demand is driven by a new fierce sovereign risk. The US has frozen the assets of countries like Russia and Afghanistan, proving that even central bank reserves aren't untouchable. Allies have taken notice. If it can happen to them, could it happen to Germany? Nearly 1,236 tons of German gold in New York is now seen as a strategic vulnerability. In a world of shifting alliances, that's leverage Berlin can't afford to leave abroad. The lesson is clear. Financial interdependence can be weaponized. Germany is de-risking, reclaiming full sovereignty over its wealth before a crisis erupts. The old argument that it could never happen here no longer holds. The trust that underpinned the gold storage deal is gone. For Germany, bringing its gold home is the only way to guarantee its financial security. Why the sudden urgency? Germany fears the window to reclaim its gold is closing fast. With the economy weakened and US-China tensions rising, Berlin worries future access to its gold could be blocked, politically or logistically. As German investment in China grows, so does the risk of US pressure or sanctions. By acting now, Germany removes a key point of leverage before a crisis erupts. The transfer will be complex and public, easier to initiate with the US as a partner, not an adversary. Domestically, the move reassures a skeptical public and asserts national sovereignty. The government is signaling decisive leadership in uncertain times. The risks of inaction now outweigh the diplomatic fallout. Berlin is making its move before the door slams shut. The world is witnessing a preemptive strike for economic independence. Germany's demand will send shockwaves across Europe. Every nation with gold in the US, from the Netherlands to Austria, must now reconsider its own arrangements. The taboo is broken. America's reliability as custodian is in question. If the US complies smoothly, it may calm nerves. If not, a domino effect of repatriation requests could follow. For Washington, the stakes are enormous. Refusing Germany could shatter global trust, but acquiescing could invite more demands. The post-Cold War alliance is fracturing. Mid-sized powers like Germany are prioritizing their own interests, even at the expense of unity. The era of automatic transatlantic trust is over. This gold demand is a symptom of deeper strategic divergence. What happens next could redefine alliances and the meaning of trust in the 21st century.